It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
We might see a syndicate arrangement where people agree to buy the property together. One of those parties might be a developer themselves, so they can factor in sort of the pricing and ability to do a bit of that within their own company.
And that is Emma Slape on our Thursday morning, and welcome back to the Real Estate Breakfast, covering all corners of the Australian property market. Yes, plenty of property news, trends and market fluctuations. We've got nearly 1,500 property episodes to keep you updated on what is happening in your local area. And if you're a new listener, you know, the great thing when you're out having a walk, you might be on the treadmill in the gym, you can start surfing through all of those episodes just to keep yourself updated, especially in your state. Well, as I mentioned, it's a Thursday morning, November the 6th, and most economists now believe the RBA's rate-cutting cycle is over. Yes, with the cost of living squeeze unlikely to ease anytime soon. So that is a contributing factor. The central bank has warned of volatility in the financial markets and forecasts for future cuts to have been sharply scaled back. The cash rate is now expected to bottom out at around 3.3% next year, just one minor cut from current levels, as the RBA signals confidence that its tightening phase is complete. So, if you were kind of banking in the first quarter of next year, I don't think you're going to see it. Another rate cut. That is all the signalling that is coming out from the RBA. So let's right now go to Adelaide and catch up with Emma Slape. And a very good morning to you, Emma. Welcome back to the Real Estate Breakfast. You were telling me the old temperature still a little bit chilly at this time of the year where you are.
Definitely has been. We've had a couple of cold days, only 13 degrees, and cold starts in the morning of only 6 to 7. So we're certainly hoping that with summer only being a month away, we're about to see the back of that.
It is spring. Has nobody told the weather that?
I know. It's crazy. And certainly at those open inspections, we've still got the mats out to make sure people clean their feet on the way in. And it's not what you'd normally see in November.
Yeah, for sure. Now, what do you make of the signalling from the RBA on Tuesday? Of course, it remained in pause mode. Sounds like it's going to remain that way for some time to come.
Yeah, it does. And I think that we've been getting those hints over the last few weeks, probably even months, that perhaps we weren't going to get as many cuts as we were hopeful for 6 months ago. So I think probably the RBA giving that certainty around where they see it is going to be a healthy thing for the market. People can plan ahead with confidence and know that perhaps what the interest rate they're on now is what they're going to see for the foreseeable future as well.
Now, you're in Adelaide. I just want to bring up this PropTrack, their latest home price index that shows values have surged 96.6% in the last 5 years. That is the strongest growth in the nation. Yet, despite the boom, regional South Australia remains highly affordable with a median price of $477,000. The Outback led annual growth of 13.28%, followed closely by the Barossa, York, Mid-North region. That is up 12.39% to 489,000. So, yeah, you can see why they're talking about the value. Back into Adelaide. Now, we were talking to Mike Drennan, another principal there in Adelaide a couple of weeks ago, talking about these first home buyers. There is absolutely no doubt that the first home buyers, they are back in the market and pretty big time.
Yeah, they are. And the first home buyer incentive has definitely been a driver in that. You could nearly tell the day that kicked in. People have been waiting for it. They're prepared. People want to get into their own home. So we're definitely seeing in those affordable ranges. And it's hard to say affordable sometimes because we're still looking at $800,000 plus in the metropolitan area. But those properties are really experiencing a strong surge of activity. And that's not just houses, it's also units as well.
Now, what we've been doing is asking principals right around the country, just leaning into what you were just talking about there, you know, these very big mortgages that people can now take on board with that 5% deposit. What about some of these conversations that you're having with these buyers? How nervous are these buyers from the Adelaide region?
Well, definitely when you're talking to first home buyers, it's a really, really big decision for them. Most people are going to need 2 generous incomes to service that type of mortgage, and it's a massive commitment. I think for the people that are moving into their second home, perhaps upgrading because they've got a family or their circumstances have changed, they've got a bit of equity. So that also pushes prices up a little bit because they're getting a little bit more for the price property that they're selling. But definitely people are very conscious not to overstretch themselves and make sure that what they buy is something sustainable for the long term.
The regional stuff that I mentioned, that's really interesting, you know, looking at the Barossa, York, Mid-North, because that is under 500 grand. What sort of drive time is that from the CBD of Adelaide?
Well, definitely in the Barossa, you will see people commute back to the city because the Barossa, now with the highways coming straight into the city, it might be just over an hour. So that is definitely a possibility. When you move further out to, say, the Mid-North or the York Peninsula, you're looking towards the 2-hour range. So that tends to be people that more work and live within that region. Another regional area would be further down south. So we're sort of talking in the Victor Harbour market, although we often see that that's driven by fairly high prices due to a lot of people wanting to retire in that area as well, due to the seaside nature of the town and city.
Now, one of the other areas that we've been talking about over the last couple of weeks, especially in Adelaide, is investor activity, which continues with its strength, especially with those interstate investors. So what is your perspective on what is happening currently?
Definitely. We've got a very large rent roll and we're seeing quite increased activity from interstate buyers. What they're telling us is that the yields are better in Adelaide and also there's a better entry price point. So if they're thinking about a unit, they can still get something perhaps within 5 kilometres of the CBD. What they see is a good value entry price, or they can go a little bit further out, perhaps 20 kilometres out of the CBD and get a house that is still going to get them a yield of perhaps around 4%.
We are talking to Emma Slape in Adelaide this morning on our Thursday, and when we come back, we're going to be talking about the outer areas that normally tend to flatten out first, but they are still growing. There's some really interesting information that Emma has got for us. We'll also take a look at the unit market and this very interesting talking point about families, 3 or 4 families getting together in the development market. So we'll talk all about that after this.
We help to break down real estate every day to help you better understand the Australian property market. Let's explore together the power of real estate.
Well, right now it is time for another property tip, and recently we were talking to Laura Ryan in Sydney, and as far as sustainability is concerned, Laura, good morning to you. You've got a property tip with regard to this.
Yes, definitely. So if you're going to try and renovate sustainably, don't waste your time like I did trying to find the right people. Just go straight to my website and you'll find sustainable builders, architects, engineers, tradies. That'll save you lots of money and also a headache.
Eager to expand your property expertise? Enhance your real estate know-how with us.
And it is a Real Estate Thursday. Emma is with us in Adelaide, and this is a really interesting one, Emma, talking about the outer areas of Adelaide that normally tend to flatten out first, but they're still growing, which is indicating that there is no stability at the moment.
That's right. If you look at long-term trends, you'll always see that sort of those outer areas where it is harder for people to service a mortgage tend to flatten out first. And I would say probably 12 to 18 months ago, we thought that those areas had probably hit their peak, but certainly we're seeing renewed interest. Again, the first home buyer grant is driving some of that, and we're starting to see those prices edge up again. even 20, 25 kilometres out of the city now. A home may fetch over $700,000, which is quite a lot for Adelaide. And we're seeing a lot of interest in those properties with multiple offers. That would indicate to us that the market still has a little bit of a way to go.
It's interesting because you only need to go back, probably 3 years ago. We were talking about the Adelaide market for first-home buyers getting into the market and buying a house. 3 years down the track, and that really isn't the case anymore. They're totally focused on buying a unit. So, boy, has that changed in the last 3 years in your marketplace.
Yeah, we're definitely seeing that a lot. Being a large property management company, often we'll sell properties for our clients. And 5-10 years ago, selling a 2-bedroom unit, which was fairly close to the city, it would typically be bought by the same profile, an investor who wanted to sit on that property for some time and get a really solid yield. But now we're finding more and more that the price point is critical, and it's at the same price point that a first home buyer can afford. So if they're willing to live in those types of properties, to get a start on the property ladder market and move on from there. So that's also fueling a bit of activity in those unit groups.
And talking of fueling, I can't get over the amount of people that are going in and buying together. This is with development projects. You might have 3 or 4 families collectively saying, hey, this is a really good scenario. What does everybody think about this? We can purchase this block. We can do this, that, and the other. And they seem to have an appetite for this.
They do. We're definitely seeing a little bit more of that in the market, particularly in that development market. So if we've got a large property that can perhaps fit 2 or 3 properties, we might see a syndicate arrangement where people agree to buy the property together. One of those parties might be a developer themselves, so they can factor in sort of the pricing and ability to do a bit of that within their own company. And we're seeing that being a really strong investment syndicate type activity. So again, it's just edging prices up that little bit more as people are really desperate to get that first piece of land.
All right, yeah, I can sort of see how that all fits together from the developers' corner because they can just share the load. Well, great to catch up with you there in Adelaide again, Emma. Hey, enjoy your Thursday. I hope tomorrow's a little bit warmer for you. And thanks so much for coming on to the Real Estate Breakfast, and wish you all the best with your run-up to Christmas.
Thanks so much. Always great to share some Adelaide insights with this podcast.
It's the Real Estate Podcast, talking properties from 6 a.m. every day from every corner of the Australian real estate market.
Sydney has always been expensive, but we've seen Brisbane, Perth and Adelaide all boom, and it's good to see Melbourne back on track after, as you said, a very extended period which hasn't been in its history. I don't think it's gone backwards 2 years in a row.
And the extended stagnation, we should talk about that because that was made worse by the higher land taxes on secondary properties. That policy saw many investors rush to sell lower grade homes, creating this oversupply and holding prices down far longer than usual. That is probably something that you were stuck right in the middle of.
80% of investors in Melbourne are mums and dads. It just got too difficult. So a lot of these properties weren't maintained very well during their tenancy, and when they came to market, they didn't have money spent on it either. So we had to sort of work through that and work out which ones were the good ones, which ones weren't.
We connect you to the best real estate information across Australia. The Real Estate Podcast.